Hello, this is the price action for yesterday, the EURUSD 3-minute chart. We had a lower high reversal with a spike down and a broad bear channel, followed by an overshoot and sideways to down. Let's go up to the 15-minute chart to see how this formed. So we were starting to channel up yesterday, and we have pulled back, and we've tried to go up once, and we've tried to go up a second time, and we've failed to go up. And this has caused a very bearish bar. Now you may be thinking, well, maybe we pull back up because we've overshot there, and that happens a lot when you overshoot. It just rejects and you head back up or you enter into a trading range. But that does not happen. We get this second bearish bar. So now we're thinking maybe we'll get a measured move of this. So this is just at the open. And we get like those two legs at least there. Take that one down to there, and that was sort of the end of the night. We've also continued to go down, but for the London session, we sort of got this really strong downtrend and then sideways to down action at the end. So let's go and look at the trades. So as we said just before the open, we've come up, we've looked like we're probably going to go up a little bit, but we actually just reject off that bigger channel line and we create this lower high reversal. This is all it really needs to do. I mean, a lot of times you'll break out of a channel, you create a higher high and you'll come back down, but sometimes you create that lower high reversal. Yeah, and it's just more difficult to see when you start overshooting. So when you overshoot this strongly, you're probably going to go down some more. But if we only overshot a little bit and then we had more bullish bars, you're probably going to go sideways to down for a little while. But so you got to be willing to trade after an overshoot, and that can be a bit hard for price action traders because we don't like to trade into overshoots. But you just got to follow what's going on. So once you see this leg, and then you pull up here, so we go all the way down here. Maybe you can enter at this point. So what I'm doing, I'll just give you an example of like what you should be doing for this stuff. So once you break out, like you overshoot here, you need to draw your channel, and you'll start drawing your channel. But at a certain point, it's just 5, 6 bear bars are closing all on their lows in a row. 1, 2, 3, 4, 5, 6. So by that time, I'm thinking we're definitely heading down more. And you could enter there. I did not enter there yet. So I was just trying to draw my channel down. And then I drew my channel in sort of like this. And then we started to skyrocket back up. And I thought, oh, we'll probably come back and retest the breakout area. And we're in this range now. But that didn't happen. At the midpoint, we just rejected it and we headed all the way down. Now, here is an entry here. So you can't sort of get in anywhere here. It doesn't sort of let you in anywhere. There's no sort of, this is the high. You want something to tick back over the high. That doesn't happen. So you got to wait for the breakout and retest, or a very strong bearish move. So we break out, we retest, and we're away from this micro channel line. So you can go short there. And even when you break out here, you can go short there because now we're expecting 2 legs down of this. And we know we have our channel line on by now. So you get your channel line on, and you're writing that down to the end of the channel. So then you can scalp a couple of times on the way down, but I'll just remove this range. So by this time, I'm switching and I'm putting my channel line on, and I can understand that we have to exit here. And then we come up here, we sort of create a micro double top. We are very far away from the EMA. So, and we're right down the bottom. So it's harder to take these sort of trades when you're in no man's land. But sort of we get that 2 legs back to the EMA, and that's not a bad bar to go short on. Just anytime you get that 2-legged pattern back to the EMA in a downtrend, it's very reliable. Anyway, so we can take that trade all the way down to the lows. We don't know we're going to break out here, but this is incredibly bearish. So it is a probability, and we do break out of there. So then we draw our other trading range in there. So this pink channel first, we pull it from the breakout area to the lows, and then we're playing this price action. So we come up, we do create this micro wedge or channel and overshoot, and we break out. So we get those two little legs back on the lower time frame, maybe on a 1 minute. Then we head back up and retest the high. This is also a two-legged pullback to the EMA, and it fails at the EMA, at the top of the trading range and the breakout area. I would just be going short there. We do go sideways for a little bit, but I would probably hold through that just because of how bearish everything is. And then we hit the bottom of this channel. So by this time, you should be getting your channel line on. We've sort of broken out of this range, but we know we're probably going to get sideways to down. So this is not really like you can even remove this now if you wanted to. It makes it more clear, so we can get rid of that. And we're in a channel now, so we're channeling down, and then we head back up really strongly. There's no real way to enter here. There's so many bull bars closing on their lows here, on their highs, sorry, and it's very hard to take any of these entries here. So I didn't take any, and plus we've put a lot of bars above the EMA, but the EMA becomes way less important, almost doesn't mean anything in a range. So even though it's pushing these bars above the EMA, 6-7 bars, it just loses its value because we're in a trading range. And then anyway, we head back down, we spike down, and then we get another opportunity to enter. So it's giving us that second entry down. So you can take this trade, even though it's a doji bar. Once that fails, it goes up and it fails out there. You can enter your limit order and you can get in and you can write it down. And by that time, we overshoot at the end of the night. So you should be exiting before the lows. And this is the third press on the channel line. And that usually leads to some sort of attempt at a reversal or a strong move back. And we did overshoot, so there is potential for not a full reversal, just a minor reversal because of how strong this downtrend is. First attempt up is probably going to fail, and it does, but this all happens after the London session. So last night, although it's a strong trend for a little bit of it, you got to really get in there and you got to just go, oh my God, it's going down, I'm jumping in. And that's sort of how Al Brooks would say it, like, look, not, oh my God, it's jumping in, but he would say something like, it's going down, just enter anywhere almost. Yeah, I think as long as you're entering somewhere around the EMA in a strong downtrend, you're going to go okay. But yeah, looking for these better entries and learning the basic price action rules from multiple sources, Al Brooks, Lance Beggs, Mack from Pats, and just other sources you find online or any information you can see and you can verify that price action works. Just keep gathering that information and you'll eventually be able to tell what a good entry is from a bad entry. But the main gist of it is in a downtrend or in any sort of trend, you want to take trades at the EMA, or if you're spiking down and you just got multiple bars in a row closing on their lows or highs, you can just pretty much enter anywhere if there's gaps. So after a gap, you just sort of enter. And by gap, I mean gaps between bars. As long as you've got room to the lows and highs, you can enter. Yeah, but that's basically it. But you're looking for that EMA is the safer bet, just waiting out for that. But sometimes it doesn't come back to the EMA and it can just trend down really, really strongly. And if it's doing that, you just have to enter. So it all depends, and that's what makes it hard. But anyway, I hope that is useful. Daily Intraday Review is proudly brought to you by our Visual Trade Journal. It's software for price action traders. It's a visual trade journal, meaning you can drag and drop, write on your chart, rate your outcomes, rate your predictions, all on the chart. It's different than anything that's out there. Come and check us out at intradayreview.com.